options uh, with various investment avenues, various financial services avenues which are linked to Gift City, how this can be benefited to each one of us. To speak about that, there is no better speaker other than Mr. Sudhir S, who is the principal officer and head of Gift City at Aditya Birla Capital. And he's the person responsible for Gift City operations with 25 years of his experience in the financial industry, in the asset management industry. Along with him, I would also like to welcome Mr. Sajesh. Sajesh is the regional head for Kerala at Aditya Birla Capital. So we welcome both of them with a warmth of what it deserves. And this is just about me. And I've been a banker, being in a financial industry for over 2.5 decades, and we have been taking up a lot of sessions for the industry, whether it's a medical association, whether it is chamber of commerce and industry. So our focus is on financial wealth creation, we ensure that our community, our customers, our friends and the goodwill ambassadors carry a great amount of financial literacy, financial awareness, especially about the taxation, about the various angles of investment, including the risk. That is very paramount important to us. Now, we all have heard about India growth story. We've been hearing about for quite some time. We've been tom about India growth story. So the question to us is, are we actually getting benefit out of the India growth story? So the answer is, if it is yes, then I'm sure you are already in the capital market participation. If the answer is no, we only hear it from the newspapers and all, then probably the session will help you to change your mindset and to get benefited out of this fastest growing economic track which we carry. So this is Niti Ayog's yeah Niti Ayog's data, which talks about how India has transformed in 75 years, how India is expected to transform in the next 25 years. So our population is set to increase, our life expectancy is set to increase, literacy rates are set to increase, GDP from probably $3.4 trillion expected to be $30 trillion. So and per capita is expected to be going up by another 7-8 times, right? So these are all great numbers. Thereby, we can proudly say that we are in India. We are in one of the fastest growing economy in the world at the right time, and we're grateful for that. So now the question is that how are we getting benefited out of it? How are we taking part of the growth journey? So what India is exactly doing, what China has been doing it for the last 2 or 3 decades, where China has moved from an agrarian economy to a manufacturing economy, and industrialization took place. So in China came into the top 10 economies of the world. This is the list of top 10 economies from 1980s onwards. And you can see China getting in 1980s and moving up inch by inch and, decorating the position of top 2 by 2010. So India has came into this list of top 10 economies little late, but it caught up and it improved its position. And currently, we are all proud that India stands at top 4, right, in terms of the global economic order. And we expect this number to be top 10, top 3 in the next couple of years. So this is where the power of a country which is growing much faster than the rest of the world, which is growing, which is benefiting millions and millions of investors, millions of Indians, millions of NRIs, millions of foreign portfolio investors, and so on and so forth. So let's look at that in numbers. So this you can see that, and thanks to the credit of some of the research report from industry partners. So India is now decorating the 4th position in the global GDP order, overtaking Japan in the recent history. So you can also see with a 145 crore or 1,400 million population, right? Where no country is near to us except probably China. And even looking at the per capita GDP, the benefit is that we are much lower today, and which is fast growing anyway. And expected the previous slide, which we have seen, Niti Aayog is projecting this by 2045 at 9 times from here. So India is going to grow in absolute GDP size. India is going to grow in population size. India is going to grow in terms of per capita. So any indicators when you look at it, this is the country where it is expected to grow faster than the rest of the world. So that gives us so much of power and confidence on the country that where to invest in. This is an IMF data of last year, where again India is projected to be the best performing country in the world in terms of its GDP growth. You can see many of the emerging nations, you can see many of the advanced nations are projected to have a much lower GDP growth as compared to India. So, if thereby, if a question is asked to me and you, which part of the world you would want to India, I mean, you'd want to invest, the answer could be that India would be definitely one of the top country in which we would want to invest our capital, invest our investment, invest our savings, etc. Isn't it? Definitely, you would want to put your money where your money is expected to grow much faster. You would have seen this report also from the media stating that India's sovereign rating has been upgraded to triple B, and this is the first time in the last 18 years India's sovereign upgrade has happened back to the historic level. So what does it mean to us? If an individual is going to borrow funds, the banks will definitely ask for what is your credit rating, what is your credibility ranking, and so on and so forth. So this is India's credibility ranking or credit rating, where countries or investors will have better confidence in the country, better confidence in its repayment capability, and better confidence in the sovereign rating altogether. So, any angle you take it, whether it is GDP, whether it is per capita, whether it is inflation under control, whether it is policy reforms, whether it is sovereign rating, you can see many areas where India stands out in terms of um, it's the best place to attract investment, attract our hard-earned savings for a better growth. Right? And thereby, if you are planning to invest in India, the question is asked, where do you invest? So this is one research report says, even if you take at last 11 years of just a backdated data, where you can see equity performing much reasonably well. In 5 out of 11 years, equity has outperformed. There are many years gold has outperformed. There are some years debt has outperformed or real estate has outperformed. So options are enormous for us to invest in the country of India with not only in equity, not only in stocks, not only in related to market related instruments, but also in commodities, but also in debt, but also in real estate and so on and so forth. So thereby, this investment vehicle called alternative investment via Gift City makes a huge difference. So in Gift City or even for NRIs in rupee terms, there are different avenues where your money can be specially invested in high density investment avenues. There are Indian equities, and Indian equities have been doing quite low in terms of the last 1 year, 15 months or so. But the future prospects, when you look at it, this is one area where one can look at it. There are performing credit funds where it can generate a better return because India's MSME sector, SME sector is ever booming, right? To cater into the manufacturing, consumption, infrastructure needs of the country. Real estate, obviously, when the country is growing at a rapid pace, real estate sector is where it will have a reflection on its investment. So India's project finance funding, both residential and as well as commercial, is offering a large opportunity. There are global funds which are launched from Indian soil, Indian Gift City options, where they can invest into global funds, and there are also non-equity based, AIF investment. But every investment has its own risk, and it is all market subject to market risk, which we all understand. But what I'm trying to give you an opportunity is that as an Indian, as there is huge amount of opportunity available in Indian market to invest in. So what is this special vehicle called Gift City, which has come up in the last 4 or 5 years? So this is constituted under this International Financial Service Center Authority Bill by Government of India, setting up a separate special economic zone, wherein which one can bring in foreign currency denominated investments and can get deployed in India or elsewhere in the world, invest into equities, invest into real estate, invest into credit funds, invest into various types of multi asset formations, and take back the amount back to their own home country with in a most tax efficient way, and with the least of the regulatory interferences. So this is where makes it more attractive for global Indians, global NRIs to come in, invest in, take the benefit out of it, and then take it back to the country where you would want the money to be finally deployed. So it is very, very friendly investment avenue created under a very clear regulatory trap. So that is what we are going to discuss. So who all can invest probably in a gift city? So NRIs can invest anywhere from the world, of course, subject to some countries with a double taxation avoidance treaties and FATCA, etc. Matters. There are countries, there are foreign nationals who can come in as an individual capacity, also come in an institutional capacity and invest via gift city. So we are going to hear from the expert itself in 1 or 2 minutes. And there are resident Indian also can invest subject to their own foreign currency limit of transfer, LRS, which is generally popularly known as, and can be invested with subject to certain norms and conditions. So when you look at it, NRIs, foreign nationals, foreign corporates can come in from foreign territory to gift city and then invest into the different asset classes, take back the return to their home country, which is all permitted. So it offers, in detail, we are going to discuss, very, very tax efficient method of investment, and that money can be reinvested into India, global equity, real estate, private credit, and so many innovative options are coming out of, gift city options. So we at Trinity is now geared up to capture some of these opportunities by facilitating NRI investors, PIOs, and foreign institutional investors to tap this gift city options and get benefited out of a better return option, better what do you call profit. It can book it from different investment cycles, etc. So we at Trinity, like our friend Mr. Jacob explained, deal with various. It is named as a one-stop investment solutions provider. We deal with investments of various types, both in India as well as gift city route. We at a team is positioned to do the stockbroking. We at the team is positioned to take care of the protection needs, banking advisory with a complete taxation, management with a succession and business continuity and so on and so forth. So we at every team member is poised to deal with all the special requirement of NRIs, special requirement of institutional investors from India as well as abroad, with a clear vision of being the top-notch financial institution, supporting each of the families and individuals and institution with a framework of financial management product, right? And with a good for the customer, good for the organization approach, with having a core values built in trust, transparency, and ethics. Being a banker, more than anyone, we understand the importance of having trust associated with financial management. So I'm skipping. So we work with some of the best partners across in India as well as abroad, including GIFT. And we are thankful to Aditya Birla Capital to work with us on this, larger financial education initiative, awareness initiative about Gift City and Gift City options for NRIs and person of Indian origin. So with that, Let me not take any more time in introducing this 25-year-old financial expert, Mr. Sudhir. He will speak to us, enlighten us about this gift city options, and he will also ensure that our questions are answered, and all your questions can be typed in the chat box. We've already received some of the questions in advance. So with that, I welcome Mr. Sudhir and hand over this session for him to take it forward. Sir. Thank you.
Good evening to you all, and thank you, Mr. Gibi, for the introduction and giving me an opportunity to share our understanding and a wonderful investment opportunity what we have for our NRI investors to invest both in India and in global markets. So thank you all of you for all the participants here for taking your time out to understand what is this new investment opportunity all about, or what is that gift city, a new jurisdiction which brings to you all. Um,
Yeah.
so
Can you see the presentation, sir? Yeah.
yes. So GIFT IFSC, that's a the expansion of GIFT is that Gujarat International Financial Tech City. So as the name itself talks about, it is established in Gujarat, in the state of Gujarat, even in between the Ahmedabad and the Gandhinagar. So it's a new smart city which has been developed by Gujarat. So it is India's first smart city, operational smart city, which is already where lots of commercial offices have been established, and as well as residential buildings have also come up. Within this, next slide, sir. So within here in GIFT IFSC, we have this India's first IFSC has been established. So because in India, you know that we in India inside that India we can only do that all transactions which pertains to only India related transactions, all financial transactions. But what are the transactions which pertains to that other countries, like cross border transactions, are all has to happen earlier was happening outside of India. As we are taking a step towards Vikasit Bharat, a developed Bharat, it is very important to do all our cross-border transactions, particularly the financial transactions within India itself. So when we are taking leap jumps in terms of technology, in terms of manufacturing, in terms of various service industries, including the financial services, it was very important for us to do all our cross-border financial transaction within India itself. So, and hence, an international financial service center has been developed, has been set up in GIFT IFSC, and it is providing all the financial services providers to conduct all that financial transactions which otherwise we were doing outside of India, that we can do it here itself within India, and offer all this financial services to both our Indian Indian investors, in resident Indians, Indian corporates, as well as for the global citizens or global investors. So this entire IFSC has been established, and a new regulator has been set up called IFSCA by passing a act in a parliament called IFSC Act in the year 2019. So it is as sacrosanct, as valid, as credible as an RBI or SEBI or IRDA or PFRDA. So hence, this is the IFSCA is going to regulate all the financial institutions which has been set up here. They are going to make the regulations. They are going to ensure that each of the fund managers follow the regulations and safeguard the investors here. The powers of IRDA, PFRDA, SEBI, and RBI has been given to the IFSCA, and IFSCA has been, and also they have given the responsibility of developing as well as regulating the IFSCA entities. So they have been doing a phenomenal job while benchmarking each of these activities, what IFSCA can offer. are at par with the other global financial service centers, like it might be Singapore or it might be Ireland or Luxembourg or in Hong Kong. So they are looking to benchmark against that the what is the benefits, which are the what are the privileges which should be given for the financial companies to come and set up businesses here. There are multiple business which could be set up here in the financial services business, to start from banks. So we have both Indian PSUs, Indian private sector, as well as that MNC banks have set up their international banking units. Now today, all our NRI investors who have been not able to hold a foreign currency bank account in India, so now they can do it. They can open a foreign currency bank account in GIFT IFSC. So all Indian resident Indians who are not earlier not able to open a foreign currency account in India, they were only allowed to do rupee accounts, right? Now today, even all resident Indians can also open foreign currency account in GIFT IFSC. So it's like that. There is many more benefits. So we have Indian, both National Stock Exchange and Bombay Stock Exchange have set up their subsidiaries and started stock exchange activities here. We have a bullion exchange in GIFT City, and we also have fund management entities who are setting up their businesses. So till date, almost about 140, 150 fund managers have established their office here and launched over 200 funds in of different categories, and investing into different securities, and as well as investing into different jurisdictions and different markets. So this it is already taking a leap jump in the last 5 years, and I think in the years to come we will see this we will be comparable with many other jurisdictions like Mauritius, Cayman, or New York, or even Singapore, or even probably better than Ireland. So next slide, sir. Yeah. So coming to the funds, particularly today, one of the agenda is to understand for both resident Indians as well as for the global investors, what is the opportunity available through GIFT City. So when we are looking at GIFT City, there are the IFSC allows us to set up the fund in two different formats. One is a retail funds. That means it is more regulated, but it has got lots of rigid regulations, or little bit more regulations, within which the fund manager has to manage the money, because protecting the investors, small investors, is utmost important. So hence the regulatory oversight is high, and however there is no minimum investment mentioned here. So the fund manager could decide whether he would like to have an $10,000 or a $20,000 as a minimum investment for the investor to invest. This retail funds can be set up to invest both in India market as well as in the global market. The second type of funds is called AIFs, alternative investment funds. So there are basically three categories of AIFs are there. One is that category one, which basically invest into infra related or SME related or anything social purpose oriented sectors. So and second category is it's called as category 2 AIF, that invest more into an unlisted securities. It might be like unlisted bonds, unlisted equity, or even today most of the real estate companies borrow money by issuing NCDs, right, non-convertible debentures. Even those are all not listed. So all those funds which invest into these kind of securities comes under category 2 fund. The category 3 fund comes into that place where the investment is made in listed securities. That means it might be equities which are listed in one or the other stock exchanges, or it might be an NCDs or bonds, again, which is also going to be listed, because today in India, most of the companies, the government, SEBI has made listing of bonds is also mandatory. So, and hence some of these people, if they want to raise money, it will come under those category 3 funds. Next slide, sir. So today, from the investor perspective, yes, we have both both Indian investors as well as foreign investors who are permitted to invest through GIFT City. When I mean foreign investors, it is our non-resident Indians who are residing across the globe outside of India, as well as our foreign citizens or foreign nationals who can also invest. and also any company or any entities which are registered or incorporated outside of India can also invest through this gift city route. So mainly most of these people can not only invest in global securities, but they can also invest into India securities, something like shares or mutual funds or AFs or unlisted equities. They can also invest REITs, invest. So there are many investment securities today are available in India. So all these foreign investors, both NRIs and foreign citizens, foreign entities, can invest into any of these securities through the gift city route. Again, for all the Indian investors and NRIs and foreign investors, they're not only they can invest in the global markets like offshore securities, offshore bonds, offshore government securities, again private equity funds or any hedge funds. So there is a whole opportunities whatever is there in the global markets that we can invest in all those things. But only thing is when we are to invest in a global markets, those funds which are established has to be a regulated entity. So I cannot invest in a fund where the fund is not regulated by any entity there. So that's where here when they're providing an opportunity, they're providing a gateway to invest in different markets, they are also ensuring that the investor protection, safety of investments is also being taken care. Um, yes, we at Aditya Birla Sun Life Asset Management Company, a 30-year-old asset management company in India, among the top 10 AMCs, we are managing a 4 lakh crore of assets under management. Today, we have we are the first one to set up our office in Gift City and launched funds. So we are launching both sides of funds. That means we are raising money from Indian investors to invest in global markets, as well as we are also raising money from global investors to invest into India market. So we have both different types of schemes which we have launched. Next slide, sir. Yes. So for the resident Indians and foreign investors, we had two funds which we have launched. One which is called as ABSL Global Emerging Market Equity Fund. We launched it in September 2023. That's basically invest into and multiple emerging markets like India, China, Brazil, Taiwan, Indonesia, Thailand, like that kind of an emerging markets, high growth markets that has done phenomenally well. The fund has completed about 2 years since we launched that fund, and it has given about 17.5% returns CAGR per annum for the last 2 years, and that performance is in dollar terms, not in INR terms. So that way, that it's a good investor. So we had both NRIs and foreign citizens, foreign companies also have invested along with Indian investors into this fund. We have, as of now, that fund is closed for subscription. So now we have launched a new fund that's called ABSL Global Blue Chip Equity Fund. This fund again invests into global markets, but not restricting to only its emerging markets or something. It looks at investing into global markets, global companies. So no specific restriction on a country side level kind of an exposures. The other funds what we have launched is into India. Again, that is basically for only foreign investors. Indian investors cannot invest into that. Only NRIs and foreign investors can invest into this India fund. So we have launched a fund called ABSL India FlexiCap Fund. It is a fund of fund into mutual fund schemes because we have lakhs of NRI investors have been investing into India, into Indian mutual funds, into Indian AFs directly in rupee terms. And they also have certain inconveniences because of that when they are investing, they have to file IT returns, they have to claim for refund if they have a better tax treaty under the DTA, and they have to file, they have to, because there is a withholding tax applicable for all these NRIs, they have to invest only through the rupee account. So there are many issues that I'll just take you through that in the next slides. So, and hence we have providing for all those lakhs of investors and also the upcoming investors an easy and tax efficient route to invest into mutual funds, to invest into equity, to participate into the India growth story. Next slide, sir. So, the first question now definitely comes as I'm going to talk about a first scheme of our investing into India. So, yes, The question is that we are already been able to invest into India. All the NRIs have been able to invest into India directly, but why through Gift City now? So basically, here it provides lots of solutions for the challenges which is faced by our NRI, NRIs and other foreign investors. Number one is that when you are to look to invest into India, PAN is mandatory. Without PAN, you cannot even do KYCs, and then and further investment cannot be made. So, but whereas here to invest into India through the Gift City route, PAN is not mandatory. So that means it opens up opportunity for many NRIs, maybe some of them who doesn't have PAN, but also most of those PIOs who would not have the PAN, right? This also makes the transmission of wealth from the NRI to their children who would actually has become an PIOs. So very easy, because that all these investments is in foreign currency and it gets directly invested, and nowhere that PAN requirement is there. The second investment is that when you're doing an investment in India, so you would require a rupee account, because within India, across the length and border of India, all financial transactions are done only in INR terms. But whereas in Gift City is the only place in India where all financial transactions are happens in other than INR, in foreign currency. It is only place in India where the currency is on is can be done on a fully convertible basis, and hence here in the fund which is established in Gift City, the investors can directly transfer the funds from their home country bank account. So if you're there in US, you can directly transfer the money to from your US accounts to our Gift City account or the fund account. You don't need to open an NRE or NRO account. But however, if you have an NRE NRO account, you can, and you have the funds available there, yes, you can also utilize that fund to invest into Gift City funds, and maybe the redemption proceeds can be taken to directly to your home country account as and when required. The third, requirements is that which I mentioned, when you are withdrawing the money, when you are redeeming the investments in India today, there is a withholding tax. So each of you have to look at, because there is a withholding tax, what is the double taxation avoidance treaty, or what is the tax agreement which both these countries is having. If there is a favorable tax treatment, and if you are exempted from tax, then you will have to file an IT returns. You have to catch hold of a chartered accountant, file an IT returns, then wait for the refund. If there is a double favorable tax treatment is not there, then again there is a tax here in India also, or maybe then you have to go back and pay there. Or otherwise, you're paid here, then you have to go back and adjust those tax payment which you made here in India when you are filing an IT returns in your home country. So all these inconveniences will just to be there. But when you are investing through the Gift City route, there is no taxation in India at all. No withholding tax, no TDS. That means you don't need to be worried about double taxation avoidance treaty at all. So no, nothing. So if it is no DTA, nothing to be there. All you have to do is that in your home country, if you're taxable, you have to pay the tax on that. If you're not taxable, enjoy that entire tax-free in returns which you would be earning from investing into India. And there is no any restrictions either for investments or for that redemptions, and even for the repatriation. How much ever you bring in, you can take it back home without anything. But yes, there is only one small restrictions is there, that is again from an NRO account only. So if you are investing using the funds from NRO account, yes, the NRO account allows repatriation of only $1 million per year. So you cannot do the more repatriation out of that. But if it is from NRE account or from your foreign currency or a home country account, then you can invest any amount here, and you can also withdraw any amount or the redeem amount and repatriate without any restrictions. And to invest into India through this Gift City road, neither you as an individual investor nor any company or a trust or anything, if you are owning outside of India, or any businesses if you're owning outside of India and you want to invest in the company's name, in the business name, then also you can invest into this Gift City fund without any additional regulations or any restrictions or any documentations. It is as simple as that, you can invest. documents are very simpler. All we need is that your normal documents what you provide to make investments in any other opportunity, and hence it's easy. And yes, we have our advisors, your favorite advisor Trinity would handhold you, would assist you in that entire process. Next slide, sir. So this is the fund what we have, that's ABSL India FlexiCap Fund. So it is a category 3 AF which has been established. It's set up in GIFT IFSC. It's an open-ended fund. Next slide, sir. You can. This exactly provides you an kind of it is an all-weather fund, so right. So it has got a large cap, it has got a mid cap stocks as well as small cap, and even the fund manager looking at that outlook of the market, outlook of the economy, he can also make changes to the exposure what he's taking into this kind of a stocks, whether large cap, mid cap, small cap. Again, he will also have a diversified approach towards sectoral allocations. He will not take any single allocation, but again, he will also keep making those changes, take exposure to that multiple sectors and multiple stocks. So this, while ensuring that your risk is mitigated by actively managing the funds, it also tries to generate best risk-adjusted returns here. So hence we have looked at here because for any investor who is want to invest into the fund, FlexiCap can be a core holdings of his portfolio, because here that you get to benefit from not only that investing in large cap companies, but also you get those additional returns, additional kicker, which would generally comes by investing into in mid and small size companies also. So as I mentioned that the FlexiCap fund offers flexibility in terms of asset allocations. It is a diversified fund, actively managed fund, and as well as market cap agnostic. So doesn't focus on one market cap. It keeps looking at opportunities. Wherever there is an opportunity, wherever there is a growth, then automatically that fund tries to capture that. So compared to that other mid and small cap oriented sector, this fund comes at a lower risk because this is actively managed. And whenever there is a downtrend, that fund will go and move to invest more towards the large caps, which is more sustainable and which is more less volatile in a downward market scenarios. And yes, it is a diversified fund across. So the fund would be holding about 60 to 70, 75 stocks across different sectors and across different market capitalization. So these are the few things I think. So you will have these details probably when your advisor will share this more details with you when you're looking at. For just for the information, could look at that the allocation into that large cap, mid cap, small cap is also been done. Considering that current market scenario, we are overweight on large cap. We have almost 50% allocation towards the large cap. But as things improves, maybe the large cap allocation will come down and the mid and small cap allocation will increase. Next slide. Yeah. So the performance of the fund, if you look at last 3 year, 5 year, and even in a 20-25 year performance of this India market, particularly this segment of FlexiCap, when you look at, it's been giving you a returns in the range of 20-21%. Even anything about 18 to 20% is an average returns probably which you could look at earning from this kind of a funds. And we expect probably when you're looking at considering the kind of growth story, considering the kind of macro changes which has been done and many policy decisions undertaken from the government, the way we are, our country is standing at today and looking at a growth opportunities, I think in next 3 to 5 years, generating good returns, handsome returns is also not, it's not a distant thing. So it is definitely going to happen. So the investment, this fund is open only for NRIs and foreign investors. So not at all for resident Indians. They cannot invest in this fund. And here the fund is denominated in US dollars. That means all transactions, both purchase as well as redemptions happens in US dollar only. So investors from any country, whatever be their home currency would be, but when they're making investment, it has to be converted and investing in dollar terms only. The minimum investment here is $150,000, and however, for an accredited investors, the minimum investment is $50,000. Next slide. Yeah, so it is, as I mentioned, it is an open-ended fund. So any investor can invest and withdraw on all business days. However, they will have an exit load of 1% up to 1 year from the date of investment. But from the second year onwards, there is no exit load, no lock-in. So they're free to exit and book profits or take the money as and when it is required on all business days. So taxation, which is very important, because not only just what is the whether how much that I earn returns, where is that money is going to be invested, but we are also, every one of us is interested to know that what is the taxation, what am I going to get. As I've already mentioned to you, that when you're investing into India, here there is no tax at all. There is a mutual fund. When I'm investing, mutual fund doesn't deduct any tax. Here at Gift City Fund also, we don't deduct any tax at source. We don't withhold any tax. So that means entire income, whatever is earned here in India market, after that all the expenses, it is passed on to you. So there is no any seepage or any leakage towards the taxation here. All you have to pay is if there is any tax applicable in your home country. So next slide, sir. For an US citizens, I'm not sure whether we have some few of the US investors are here, but for an US citizens or UN investors, the taxation is slightly different. But again, this is nothing to do with the taxation in India, because even for US investors, the taxation in India is zero. So India, they will not pay any tax. There is no withholding of tax. But however, in their home country, when they have to pay the tax, because US taxes the global income of their residents. So wherever they have earned the income, it is to be disclosed, and tax has to be paid in their home country. And hence, in their home country, when the US investors have to pay the tax, all foreign funds is treated as a PFIC, that is passive foreign investment company. And hence, the income from PFIC is generally taxed as per their slab rate, not as a capital gains rate. But however, they have an option of going for an QEF election, that is qualified electing fund election, by submitting a form 8621, and where the capital gain is going to be taxed at the capital gain rate, and the dividend and short-term capital gains, if any, will get taxed as a slab rate. So every year after completion of the calendar year, at the fund level, we will be providing a K1 statement, which will facilitate you to identify what is the long-term capital gains earned by the fund and what is the other income earned by the fund. So it will help you to file your IT returns and take benefit of the lower taxation rate on long-term capital gains. So next slide. So next comes that the another important opportunity for not only for NRI, for Indians, even for NRIs and foreign investors. So it is investing internationally. Yes, there is no doubt that India is a growth-oriented story. We have already been generating good returns in our stock market. But yes, globally too, there are many more better companies, good companies available, good businesses are available, where it will help you to further diversify your investments and earn better returns. So we would like to provide you those investment opportunities, not just as India investment opportunities, but also some of those opportunities available in global markets for you. What is the benefit of investing into the what is the benefit of investing into international markets? So definitely global diversification, because for us as an Indian investors, resident Indians, we would have all types of diversification in India, right? Equity, debt, gold, real estate, and even in equity, we would have had that large cap, multi caps, small cap, everything. But we still will carry one type of risk, that is single country risk. So what is the next level of diversification is to go for global diversification. That means take your exposure into multiple countries, right? And again, it's the same thing for our NRI investors or some of those investors from many of the countries like Middle East or Asian investors, who would have the same, significant allocation towards India or maybe their own home country. But here they can look at beyond these our emerging markets, beyond this Asian markets, beyond the Middle East markets, into the global market also. Second thing is that we all as global citizens now would like, because that the people would like to travel around, people would like to go outside of their home country for their education, holidays, medical requirements, or many more things, in addition to the investments. So building up a corpus outside of your home country has also been very helpful. So for Indians also, where that they look at if they would like to build up a dollar corpus, yes, then this is an opportunity, because when you take the money out, you cannot hold it in bank account for more than 180 days. It has to be invested, and hence this brings an opportunity where you take the money out under that liberalized remittance schemes, which allows you to invest, up to $250,000 in global markets. So you can build the corpus, you can accumulate it, and as and when you require, you can also withdraw it and utilize it for your requirements. For US, but this same opportunity is available for our NRIs and other foreign investors also to invest into these global markets. But however, that limits is not applicable for NRIs and other funds. So we also this fund is also ideal for NRIs who have returned to India now for good, but however they have certain money outside of India which they don't want to bring it to India, but they want to continue to invest there. But yes, this is a global opportunity. Global fund can be a solution for them too. And even many of our Indian investors who have probably that some of the, if they're working in an MNC, if they have ESOPs, if they have encashed those ESOPs, they have those dollars available outside of India. Yes, this is a great opportunity to continue investing, staying invested in global markets, and hold their dollar assets and build their dollar assets for their future market. The third important point is that there is many great companies in global markets, right? Over years, over decades, they have become real global big companies, serving just not in one country, but supporting or building businesses across many countries, right? Some of them are all technologically superior. There's no second company like that, and there are someone has got very large because of their operational size, which they have built over period. So what we look at is this: you get to invest in those kind of names when you are investing into this fund. So these are the benefits which are there, which I would like you to really look at this fund from a closely for your future investment requirements. Next slide, sir. So sometimes the question also comes when you try to look at, when you want to invest in global markets, the performance or the returns are not very high. But yes, the global markets too provide very good returns. The MSCI All Country World Index has gained about 10% plus annualized returns for the last 10, 20, 30 years. But when you're, and that is again in dollar terms, not in any specific currency. And hence, for most of the investors from emerging markets and other market, it do add up additional returns, because some of those emerging market currencies do depreciate against the dollars. It adds up to their portfolio returns. And second, some of those countries whose currency is pegged to US dollars, I think this 10% is not just at the index level, at the market level. But however, the fund is actively managed. By actively managing the fund manager will generate additional alpha to the investors over and above this market returns. Next slide, sir. Yeah, so this is just trend of probably last 10, 20, 30 years, which we could look at, where global growth is driven by technology, right? So and hence, if you look at most of this technology developers, technology innovators are concentrated in very few countries, and there are very few people. When we who are all scattered across the globe, we don't get to invest unless otherwise we go out of our home markets and look for these companies to invest, right? And even today, everything is driven, not only the technology innovators are growing, but it also benefits some of those companies who are utilizing this or adopting this technology into their businesses. And hence, this technology is going to be an consistently a growth trend. And I think we like to look at this, that encash this opportunity by investing into these global technology companies. And through in the fund, what we have launched called ABSL Global Blue Chip Equity Fund, we are one of our major allocation is towards technology to take benefit of this, the long-term growth opportunity available in technology stocks. Next slide, sir. So it is a category 3 AIF which we have set up. However, it's a closed-ended fund with a 4-year term from April 2025. So we already have completed almost 6 months into that. We have the residual maturity of 3.5 years. We will be accepting the money for another 4 to 5 months. After that, the fund will be closing for subscription, and the fund will mature in April 2029. So generally, that P investors who would be coming in now will have an investment period of 3 to 3.5 years. Yes, as it is a closed-end fund, there is no exit option available. So you would have to hold till the maturity of that. But the fund is actively managed. It is not an passive fund. It is not like buy and hold the stocks for 3 years. We will actively manage the funds. We'll look forward for opportunities to generate alpha for for our investors here. And hence, the investors, when they're staying invested, stay put for 3.5 years, the fund will be actively working to generate extra returns for them. This again, the fund is going to be a fund of fund, because to ensure that there is a tax efficiency for the investors, when we are doing that active management of the stocks, when we are selling a stock, it should not get taxed for the individual investors here. And hence, because we have made a fund of fund route, master fund will keep buying and selling the stocks, but however, we from the will be holding that master fund units without any changes, because as per the Indian Income Tax Act, we need to hold any global security for a minimum period of 2 years if you would want to qualify for a long-term capital gain tax at the rate of 12.5%. If it is a short-term capital gain at the fund level, the taxation becomes at 35% plus surcharge and cess, which is today about 42%. Hence, we are through this structure, we are ensuring that all our investors enjoy only long-term capital gain tax in this fund, and they don't get into any of the short-term capital gains and pay higher tax. Well, the fund continues to actively manage the fund. Next slide, sir. Yeah. So the investment philosophy of this fund is to focus on two important parameters, that is quality and growth. So when we are identifying the stocks, when we are identifying the companies, we'll be looking at both quality. It should be a high quality company, and it should be a high growth company. So it's a mix of that. Yes, it's too difficult to get those kind of a stocks, but that is what which we would want to find in while investing into this fund, because hence we are not looking to build a large portfolio. We are focusing on to identify only about 25 to 30 stocks, 30 high conviction companies, which provides me both quality as well as growth. What is quality? How are we defining quality? So quality is defined by those companies who have a free cash flows. That means the company is generating cash profits year after year after year, and that free cash flow margin should be in the range of 18 to 20%. So that is a quite high mark for to look at. Then again, the company is not only just generating free cash flows, free cash, but it should that whatever the capital which they have allocated, the return what they should be getting is also the higher rate of 18 to 20%. So the return on invested capital should be 18 to 20%. The third on the growth is defined as the company should be earning the earnings of the company should be compounding year after year at least at the rate of 10%, because that is how that growth is also defined. And then yes, this size of that or a free cash flows or even a growth helps me as a in when we are qualitatively looking at the company, because this is that itself acts as a barrier to entry. No new company suddenly can come into this business and change that your the profit margins or the earning capabilities. So hence we are going to invest only in large cap companies, best in class companies, big brands who are well established and been there in the business for last many decades. Next slide, sir. So this is a slide about on some of our portfolio companies, their market share in their respective businesses. So they hold a dominant market share anywhere between 40 to 90%, 95% in their respective business. What is the benefit of this in the market share? No new company can suddenly come in if someone is having already a 90% market share, again the size, right? No, if they come, they will not be able to impact any of their profitability margins or anything. The third point is that these companies can pass on the cost to the end users without have to worry about that losing out the business or losing out on the market share or profitability margins. And hence, these companies will can continue to grow at their their profit margins as well as the earning profit market share of their businesses. Next slide, sir. So a few points which I have mentioned that we look at for companies with at least 10% earnings growth. This is a slide, left side one, which talks about last many years. These stocks, which are part of our portfolio, have seen an earnings growth in the range of 20 to 22%. These are all very large companies, big companies, but again have grown substantially at a high growth rate. But yes, next 3 years anticipated or expected earnings growth is also in the range of 18%. So, and even whether the return on invested capital is about 33%, free cash flow margin in the range of 20%. So, whatever that we have told, that is what is exactly practiced, and what when you're buying the stocks, is this what you buying the fund or investing into this fund, this is what we'll be getting into. Next slide. So when you're investing into this fund, this markets, now currently this one question will definitely come to your mind, is that is it the right time to invest? So is it market expensive or is it cheap? Yes, we have compared this market with about two or three things. India is a high growth sector. So GB sir showed all of you about that the GDP growth of India, which has been the highest among that all our other comparable both emerging markets as well as the global markets. So it's a the valuation has also been a little expensive, but however that because of the high growth which has been there and some of those macro changes, it will continue to look good. But however, if you look at among the two other markets, yeah, ACWI has also been well placed. ACWI is called All Country World Index. It comprises of about 85 to 86 countries and 2,500 stocks from all these 85, 86 countries. So that is actually, if you look at the red dot, talks about next 3 years earnings growth, which is in the good about 18%. But again, on the forward, P is also, which is in the green bar, both goes hand in hand. That means that is equal priced. So it is neither expensive nor cheap. That market is neither expensive nor cheap, well priced. So but growth is very good. Anticipated growth is very good, and this is about market. But when we're going to do that, an active management of that, you would probably identify the stocks which will further do better and outperform the markets. And hence that shows that, and the right hand side shows that. So the portfolio of our fund, that the PE, the forward PE of our portfolio is below the market thing. So I think that means our portfolio is much cheaper than the market, and hence shows lots of opportunity to generate good returns for the investors. Next slide, sir. So these are the few themes which we're trying to look at in this fund. The largest allocations would go towards technology as well as software services. Yes, these are that they are here to say. We might talk about Nvidia. Already the share price is so high, but yes, TSMC, these are all going to stay. Their business is not going to change because they have 95% market share in their business. So no new guys cannot come and change it for next many years. The second theme what we are having in our fund is consumption, right? So because today affordability has been growing, people have been traveling around. So some of these global brands, global companies will really get benefited, like LVMH, Meta, Amazon, Hilton, which has got the global presence in terms of hotels, Netflix, and a global entertainment platform today. Meta has become a global advertisement platform. So it is not a e-com or other platform. It is really has become a global advertisement platforms. And then the next thing is that your industrials, because these are all, again, some of this company have got some technical superiority, or they have a large manufacturing presence or a logistics or a supply chain benefits. For example, Linde is a global leader in industrial gas manufacturers. They have presence in almost every country. Cash rich company, so no near competitor there. Rolls-Royce, Safran. So these are all again that large aircraft engine manufacturers, right? So there is no second company, there is no near-term competition for that. So hence, considering these kind of limits, we are focusing on these kind of a trends where there is no much of competition. Each of them are all very large industrial leaders Again, in the finance, we are not getting into banks because there are many banks. There are small banks, large banks, everyone, which brings in some risk there. But whereas instead of that, we would like to go with that some financial service providers like Visa, S&P Global, Gallagher, because there is no competition. They are large. There is nothing, no one can beat. And even in pharmaceuticals, we instead of drug manufacturers, we are focusing more on medical technology companies and other value chain service providers. Next slide, sir. So these are a few. This fund is already live, and this is the portfolio, existing portfolio of ours, which you are looking at, the top 10 stock, holdings, as well as country-wise exposure for your reference. Next slide, sir. Yeah, I think we can go ahead. Yeah, this is about 5 months old performance. The fund is generated about 21% returns in the last 5 months. I think yes, it's been pretty good. But however, we don't want you to look at that the performance, last 5 months performance, and look at to and take the decision. But rather than that, I request your attention to the outperformance which the fund has earned against its benchmark, that is MSCI All Country World Index, about 5% of outperformance. And this is what which we would like to do by active management of the fund. We would like to generate alpha. We would like to beat those benchmark and generate at least 3% of returns over and above that after adjusting the expenses. Next slide, sir. So taxation part, again, like many countries, India is not exempting any of their Indian residents from income tax. Whatever be that income we earn from across globe, that we have to pay the tax in India. So the way we have structured the fund in such a way that Indians will pay only 12.5% tax on all the gains. That means again this tax is paid at the fund level on maturity of the fund, and the investors, whatever the income which they receive on the hand, it is already tax paid income, and they don't need to pay any tax on that. But however, for NRIs and foreign investors who would be investing into the fund, there is no withholding tax in India at all. So they are not going to pay any tax here. All they have to do is that pay the tax in their home country if applicable. So hence, this is a good opportunity for everyone to look at, not just for Indian investors. Onboarding documents are pretty simpler. There is an application form and contribution agreement which investor has to sign. In addition to that, he just needs to provide the same identity proof, address proof, PAN copy, or bank account proof, which generally that is what you provide whenever you are making any investments. So here also it's the same documents, even for NRIs and foreign investors also same thing. If you have a PAN, you will give me the PAN. If you don't have the PAN, you don't need to be worried. So you just give the no PAN declaration, but you will continue to provide those other documents like identity proof, address proof, and tax residence certificate, and make an investment in this fund. So for all that, what you don't need to open a demat account or any such things to make investments here. You don't need to open any new bank accounts here. Wherever you are having the bank accounts, wherever you're holding the funds, from there itself we can make an investments. So all you get is that NAV is declared on every business day for FlexiCap fund, on a monthly basis for global funds. So that will be disclosed to you. Statements are emailed to you on a monthly basis, and even the portfolio statements are shared with you on a quarterly basis. Even portfolios would be available even on a monthly basis also. But however, as strategically we will communicate. But as and when you need any other assistance, inputs, we will be available to provide you those inputs and assistance here. Yes, yeah. So that's it from my side. So thank you very much for the time, and maybe we can look forward for any questions on investing into India or global market through GIFT City.
Yeah. So I think thank you, sir, for non-stop communication about GIFT City and GIFT City, how GIFT City can benefit each of our NRI investors and the people around listening to us. So that's been amazing. I think we have received a couple of questions. Jacob, would you
Yes,
like
sir.
to put forth some of the questions which has come in the chat and which has already come in our mailbox also?
Sure, sir. So, first of all, I would like to thank you, Jimmy sir and Sudhir sir, for the most valuable session. I really hope it was very good and enlightening for all our listeners. So, we do have a couple of questions lined up from our audience, along with some questions we already have received in our chat box. So, the first question is: can residents invest, or is it for NRI investors? And the main thing is there what is the minimum investment amount? Because a client was asking about the $50,000 limit, which you were telling for a special case. So the client would like to know more details on that, sir.
Sure. See, Indian investors can invest into a global fund, but they cannot invest into an India fund here. So, because India funds, they can already directly invest. They don't need to come through an gift city route, making a full roundabout through that converting currency from INR to dollar, dollar to INR. But yes, Indian investors will definitely be eligible to invest in global funds. But whereas our NRIs and foreign investors can invest in both India funds as well as in global funds. With respect to accredited investors, yes, the any investor normally without any they providing their income documents or anything, they can invest with a minimum of $150,000. But if someone has to invest lower than that amount, yes, we have activated that one. Like we call it a so that is available only for accredited investors. As for the IFSCA, any investor who has a annual income of 2 lakh dollar, 2 lakh US dollar, or if they have a net worth of $1 million, so they are considered as an accredited investors. So by providing their income documents or something, they can choose to invest a lower amount also. If they want, if someone doesn't want to invest once at one shot that $150,000, they can invest a lower amount at $50,000 in FlexiCap fund and $75,000 in blue chip fund by providing this either a network certificate or an income document.
Yeah.
Thank you, sir. The next question is about the regulation and compliance. So, which regulator oversees this kind of funds? Is it the SEBI,
No,
IFSCA?
yeah. So, see, in India, as you know, in India, we have four different regulators for financial market. RBI regulates banks and NBFCs. You have SEBI regulates all the capital markets. IRDA regulates insurance. PFRDA regulates pension funds. So it is too difficult in a small place in an international when you're competing with international markets, where in US it is only SEC, right, which covers everything. In Singapore, it is only again MAS, right? So in most of the other countries, I've got a single regulator, but in India, we had four different regulators for financial services. It is difficult for people to collaborate and focus on the development. And hence, in 2019, our government set up an unified regulator. So we have only one regulator. So, but the powers of RBI, SEBI, IRDA, and PFRDA has been given to the IFSCA through that IFSCA Act, and now only IFSCA regulates all the and develops all the IFSC plays. And so we are a regulated entity. We are set up in office in IFSC, and we are regulated by IFSCA.
I think that is one of the unique feature also in India investing in through India, where regulation is much more proven, and many times a test of the times only regulatory controls have helped us to remain strong and without failures on the banks, financial institutions, etc.
Absolutely. So they are very very serious about ensuring that we safeguard the interest of investors. So the fund when they have to give the permission for anyone to set up the business, they have multiple levels of checks and balances which has been there, which they have look into everything before giving someone to start a permission to start a business here.
Yeah.
Sir, the next question is: what are the KYC document requirements, sir?
I think
Yeah.
that the Jacob,
Yes,
if you
for an
remember the last
individual, yes. Last slide, which I
slide,
mentioned,
it was.
identity proof, address proof, and their tax residency certificate or a tax identity number, whatever is called in their home country. So these are the three documents. Which
Sir, another important question is: what are the hedging options available in investing in this, sir?
Yeah, see, basically, when you are investing into a global fund, hedging is not required. Number one, because of one reason is that most of us that Indian currencies are all generally been, gets uh, uh, global currencies appreciates, and our currencies are all depreciate against these global currencies. So it's actually benefits us, right? It actually benefits all the Indian investors when they're investing into the global market. So by if I hedge, they will lose out on the additional benefit what they get. If I to look at for this Middle East investors, some of this AED, it is pegged to dollars. For them, it is neither beneficial nor thing. So only the if I hedge it, the hedging cost will actually impact him, but him or her. So otherwise, there is no value addition for them by doing the hedge. So and hence, we are not doing any kind of hedging for our global funds. And second, even our India fund is also, if you look at it, is a long only fund where the investor is going to come invest for many years, like not for 3 months or 6 months. They'll invest for 2 years, 3 years, 5 years. They may also have the liquidity to withdraw that the money anytime when they want. So in such scenarios, and we also have investors coming for every day, right? It is not just one day they will come and one day they will redeem. They will keep coming in, they will keep redeeming it out. So in such a case, hedging is not possible, because when you have to hedge currency, basically we do hedging of currency when we are doing a fixed income investment, when we are investing in a bond or an NCD, because where the time period is very fixed and your return scope is also very fixed. So hence we do hedge the currency there. But when we're investing into equities, generally it is not hedged. Most of the FIIs, FPIs who invest into India also into equities, they don't hedge, because hedging is not beneficial in a long term. Because today, if you have to look at a 3.5 years or 4 year currency hedging also cost you 3%, 3.5% per annum. Today, your rupee depreciation also in the same range of 3 to 4%, or maybe sometimes better, right? So it really, hedging doesn't really reduce your risk drastically. So hence in both our funds, we are not using any hedging strategies with respect to currency.
Sir, the last question of the day, because we do have several questions. So
I think, Jacob, we need to respect the time on a Saturday of Sudhir and also of the participant.
So to the last question, because we can't cover every question, but definitely we'll cover all the questions individually by our team. But
so every question, so one assurance to everyone is that every question which you raised in the chat box will get answered to you with our team coming back to you on that. So be assured on that. Jacob.
So the last question is, how are the redemption payouts made, sir? Because is it in the Indian currency or is it in the foreign currency? That was one of the major questions asked, sir.
Yeah, definitely. See, the fund is denominated in US dollars. So the investments and redemptions happens in US dollars only. But however, if the investor wants to take the money in their home currency thing, because if they're taking the money into their bank account in their home country, it obviously they will get it in the conversion happens from dollar to their home country currency, and gets credited. But otherwise, the fund does all the transactions in US dollar only.
Thank you, sir. So as the time is running out, I would like to sincerely thank Sudhir sir and Gibi sir for arranging and participating wholeheartedly in this meeting. And thank you so much for everyone who has participated in this meeting. We have attached the feedback form in the comment section. Please do fill the form. We will answer back to every queries by our team. And thank you so much. Thank you so much for your evening.
So,
have a nice week.
So I wanted to just tell that Diwali is just around the corner. And if we start taking a decision of investing in the great Indian story, next year Diwali and the many more years to come, we will have prosperity flowing in through all the GIFT City investment. So with that, let me thank him for a wonderful session. I think many of you have mentioned that it was a great session. So all credit goes to Sudhir ji for arranging on a Saturday to come for this event with all of us. And wish you a happy weekend and a great time ahead, sir. And to each one of you.
Thank you all, and have a great day and a great weekend. So God bless.
Thank you.
So to the audience, please do fill out the feedback form. We appreciate your feedback and we will get back to you. Our team is always there to help you 24/7. You can connect us on our website or through any social media platform. Thank you so much.